Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Kevin Mahn, President and CIO of Hennion and Walsh Asset Management, to discuss potential growth opportunities ahead in 2022, despite the volatile start in the stock market for the year. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Thanks so much, Jill.
What should investors make of all the market volatility to start out for 2022?
Yeah, sure. Certainly coming into 2022, we anticipated some more short-term bouts of volatility. And we did experience a pretty severe bout of volatility in January as both the S&P 500 and the Nasdaq had their worst monthly decline since March of 2020. And the S&P 500 had its worst decline since 2009 in terms of January performance. And all this, Jill, comes on the heels of a year in which volatility was relatively low. In 2021, we experienced only one pullback greater than 5%. Historically, we experience about 3 pullbacks of 5% or more each year. So investors should put all of this volatility in perspective and not take or make knee-jerk reactions to change their portfolios or try and deviate from their risk tolerance. Stay true to their risk tolerance. In other words, Jill, if the market is moving higher, they shouldn't necessarily just get more aggressive. If the market is moving lower, they shouldn't necessarily get more conservative. Stay true to their risk tolerance consistent with their longer-term financial goals.
Can you provide us an update on what you call the Fed's TNT, taper, narrow, tighten plan?
Absolutely. So we've learned a lot from the Fed since December as they made a more hawkish pivot. As it relates to the first T, that being tapering, we anticipate their bond purchase program ending by the end of the first quarter of this year. In terms of narrowing or shrinking the size of their $8 trillion plus balance sheet, we anticipate, based upon the recent comments from Chair Powell, that they'll start the process of winding that balance sheet later this year. And then, of course, what everybody cares about, Jill, that being tightening or raising interest rates. We know now that from the most recent dot plot chart released in December that in all likelihood there may be 4 rate hikes of 25 basis points this year, totaling a grand total of just 1%, still at historic lows. And I would be somewhat surprised to see the Fed be as hawkish or as aggressive as they suggesting that they are. I think they will be more data dependent. And if the economy does start to slow later this year, and if inflationary pressures start to moderate, I'd be anticipate to see that many interest rate hikes, or surprise rather.
And given your still growing but yet slowing outlook for the new year, where do you see potential growth opportunities ahead?
Absolutely. So what we mean by that, still growing but yet slowing, we think the economy will continue to expand, albeit not at the extent that we saw in 2021. Earnings will continue to grow, but at much less of a pace than we saw in 2021. And stock prices should move higher, but certainly nowhere near the height that we've seen last year or over the course of the last 3 years. 2 particular areas that we like in 2022, both revolve around the small cap area, Jill. One being regional banks, community banks, and mortgage and thrift institutions, as financials generally perform well when the economies expand. A second area relates to biotech. Yes, the beaten up biotech area and those smaller cap biotech names that continue to provide innovative healthcare solutions that our society needs. We believe that the M&A activity in both of those areas will pick up in 2022 and beyond. So we see more growth potential in both of those areas.
And what about international? Because valuations there have been attractive for quite some time. Should investors also be considering international stocks now?
I believe they should consider international stocks as part of a globally diversified equity strategies. As you correctly point out, Jill, valuations are more attractive as it relates to both international developed and international emerging market equities. We also see that the rate of vaccinations are going up in developed and emerging market countries as well. And as those vaccination rates go up, their economies should be able to expand similar to the extent of what we've seen here in the United States. We're very fortunate to partner with Dorsey Wright on our own international momentum trust strategy here at Smart Trust. And interestingly enough, from a momentum basis, they see more upside potential as it stands right now related to developed markets than they do in emerging markets. But I think you need that proper blend of the two.
And finally, Kevin, the $1 million question, of course, where can investors turn for income potential in 2022?
Great question, Jill. And even if the Fed does raise rates 4 times in 2022, or perhaps even more, as Jamie Dimon recently suggested, interest rates will remain at historic lows, at least for the foreseeable future. As a result, investors will remain challenged to find attractive income-oriented opportunities. 2 areas that we like in this environment, one being municipal bonds or municipal bond closed-end funds. Secondly, preferred securities. One area that investors tend to overlook. They offer attractive yields, relatively low levels of volatility, and are generally associated with the primary issuer of preferreds, that being banks, which goes back to that area that I touched upon earlier, that we see upside potential in an expanding economy.
All right, Kevin, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Take care.